What do you mean by TDS? Tax deducted at source. What do you mean by TCS? Tax collected at source. What do you mean by long-term capital gain? Very simple. Anything which is more than 12 months, more than 24 months, more than 36 months, we call it as long term. Agricultural land in the rural area will not attract capital gain. A warm welcome to one and all. This is your Adasa here, lecturing Vidhyaashram First Grade College, the temple of excellence. Now we are discussing your tax management too. In that we are discussing the topic called revision, and this will be from your unit 1 to unit 6, and we have divided your tax management into two in the sense we are discussing completely your practical, problem oriented. I'll take one more session on this particular topic, that will be your theory as well as question paper solving. We'll have one more session on this, that will be after this session. Now, in today's session, what we are going to discuss? These are the topics are there. I'll take each problem in each topic. Not only I'll solve the problem, along with solving the problem, I'll explain you the concept also. How to go with this particular unit, how to go with this particular topic. These are the topics are there for your examination. How to go for all this topic, we'll learn each and everything in today's session. Now, the first one will be called as your depreciation. First part is called as what? Depreciation. The second part is called as capital gain. Third one, income from other source. Assessment of company, assessment of individual, TDS, TCS, advance tax. What do you mean by TDS? Tax deducted at source. What do you mean by TCS? Tax collected at source. Along with that, we have a topic called advance tax. After advance tax, we have theory part, that is assessment procedure. Practical as well as theory, we call it as GST. And these are the topics we have for your examination. I have covered each and every topic in this. And I am not concentrating on theory. As I told you, we'll have one more session. In that session, I'll solve one question paper along with your theory topic. This session only for your revision. Revision in the sense, each unit I'll take one topic, one problem, we'll solve that problem. That will be our plan for today's class. First one will go with, I'll write the heading, which topic we are doing now. We are doing depreciation. Which topic we are doing? We are doing the first topic called depreciation. What do you mean by depreciation? As you know that decrease in the value of the asset, we call it as depreciation. Like you bought a mobile for 20,000. You bought a mobile for 20,000. Now, the same 20,000 mobile, after 1 year, can you sell that mobile for more than 20, like 25, 28, 30? Can you sell that? Answer is no. You cannot sell that mobile for more than 20,000. Then what you should do now? You have to decrease that 20,000 mobile. After 1 year, you can sell it for 12,000. You can sell it for 15,000. Depends on condition, model and technology. You can sell it at lesser price. Whatever that 20,000 mobile you are selling for 15,000, the difference of 5,000 we call it as depreciation. Hope you are clear. Good. Now, in this, don't go as per the accountancy, go as per income tax. While calculating depreciation, always remember there are two things are there. One is before October 2nd, one will be after October 2nd. In the sense, if you bought your mobile, you are using for more than 6 months, full depreciation. If you are using for less than 6 months, half depreciation. Hope you are clear. If you are using for more than 6 months, full depreciation. If you are using for less than 6 months, we call it as half depreciation. Hope you are clear. Yes, this is all about, we call it as depreciation topic. How do you remember you have used more than 6 months or less than 6 months? Hope you know that when is Gandhi Jayanti. When is Gandhi Jayanti? Yes, October 2nd we call it as Gandhi Jayanti. Simple. Any asset purchased before Gandhi Jayanti, full depreciation. Any asset purchased after Gandhi Jayanti or on the day of Gandhi Jayanti, half depreciation because you are using for less than 6 months. Hope you are clear. Less than 6 months, half. More than 6 months, full. This is all about your depreciation topic. Hope you are clear. Good. Now we'll come for the actual problem of depreciation. How do you go about this depreciation? Now, WDV of factory building. Remember, the procedure is very simple. Opening WDV, add purchases of asset less sale of asset. Opening plus purchase minus sale, whatever you get on that you should calculate depreciation. Hope you are clear. Simple concept. Opening plus purchase minus sale, whatever the difference you will get on that you are supposed to calculate depreciation. Now, WDV of factory building. In this what happens? Your actual value is 80,000. Your factory building is how much? 80,000. New additions when it is purchased September, before Gandhi Jayanti or after Gandhi Jayanti? Before Gandhi Jayanti. While calculating, remember your year starts from 1st April, ends on 31st March. Don't go with Jan to December. Always while doing your taxation, your year begins when? 1st April. When it will end? 31st March. This is your financial year. Now, September means before Gandhi Jayanti. If it is before Gandhi Jayanti, we take it as what? Full depreciation. Why? Because more than 6 months. Clear? Anything before Gandhi Jayanti, if you buy, full depreciation. Anything you buy after Gandhi Jayanti, it is half depreciation. Now, WDV of office building 1/4/2009 is 50,000. See, this is one type of asset. And one more asset is there. WDV of office building. This is a factory building. This one is office building. So how much it is? 50,000 and the percentage is 10%. You have to bifurcate. You have to go one by one. Next. Machinery, they have given information. These two are one information. And machinery on 1/4/2019. New machinery purchased and old machinery purchased and installed, sold off old machinery. Up to this one calculation. Hope you are clear. You have to bifurcate. In the examination, they will not mess up. They will give you separate columns. This is separate column, separate, separate. Separate column wise, they will give you all the information so that there won't be any confusions. Then, furniture WDV, new additions, this one. These two are one. These two are one. Hope you are clear. How many assets we got? 1, 2, 3, 4. We got totally 4 assets. Do we have continuation? No. Your question is up to this much. Asset number 1, asset number 2, asset number 3, asset number 4. Hope you got it. Whatever given in the question, you have to split. Depends on method of asset as well as the percentage. You may say that why we cannot add these both, but they have given separately. That's why we do it separately. Hope you are clear. Yes. We'll go with factory building first. I'll go to the answer. Rate of depreciation is 10%. This we call it as block 1. Each thing we call it as block 1, block 2, block 3. Now, in this what happens? Factory building. What is the value? Factory building is 80,000. Then I'll change the color so that there won't be any confusion. Yes, factory building is what? 80,000. 80,000 is a factory building. Along with that, what do we have? New additions on above. How much? 40. 80 plus 40, how much? 120. Is there anywhere sale of factory building? No. What is the format? Opening plus purchase minus sale. We have opening, we have purchases, there is no sale. Then what you will do? You got 1,20,000. What is the depreciation? 10%. On 1,20,000, calculate 10%. You will get 12,000. Your answer is 1,08,000. Hope you are clear. Any doubt? No. Your first one I have completed. 80 plus 40, 1,20,000. On the 10% depreciation is 12,000. From 1,20,000, if you minus 12,000, you will get 1,08,000. Whatever 1,08,000 you got, that is your final answer. And this 12,000 will go to outer column. Why outer column? Which topic you are doing? Depreciation. So, what we need? We want only depreciation. You don't want what is your profit and loss. We are doing only depreciation. Out of this calculation, what is your depreciation? 12. Only 12,000 will go to outer column. Hope you are clear. Good. So, I done with first asset. Your first asset is done. Now, I'll go for this second asset. What is the value? 50,000. For office building, is there anywhere purchase of office building, sale of office building? Is there anywhere? No. I have only one, that is WDV of office building. Easy to calculate. Take 50,000. No purchase, no sale. Your answer is 50,000. On that you calculate 10%, 5,000. Your final answer is 45,000. Any doubt? No doubt. Now it will be what? 12,000, and from this depreciation is how much? 5,000. 12 and 5. Two assets are done. First one I have completed. Second one I have completed. Hope you are clear up to this. I'll go back and see the third asset. What is the third asset? This one. I have so many adjustments for this. Now, machinery on 1/4/2019, opening balance is 1 lakh. Then, new machinery purchased and installed. 1/4/19 means the old one. The 1/4 means what? More than before Gandhi Jayanti. So, it will be what? Full depreciation. 60 plus 50, 110. Then, an old machine purchased and installed. When it is purchased? November. November means what? After Gandhi Jayanti. After Gandhi Jayanti means full or off? Exactly. Very good. We have to take half depreciation. So it will be what? Yes. 60 plus 50. And again we got 40,000. And is there any sale? Yes. There is a sale on 40,000 is a sale. 1 lakh plus 60 plus 50 minus 40. Hope you are clear. Opening plus purchase minus sale. You will get your final answer. So we'll go opening furniture. So here we have done. This is furniture. We'll come back later. We will do machinery first. Opening is 1 lakh. Purchase 60,000. And one more purchase is 50,000. Total 2,10,000. What is the sale? 40,000. 2,10,000 minus 40. So it will be how much? 1,70,000. Now you calculate depreciation. How to calculate depreciation? Remember, in this 1,70,000, old machinery also there, new machinery also there. The old machinery you have purchased when? After Gandhi Jayanti. One more asset you have purchased before Gandhi Jayanti. You have to split. How? See. Out of 1,70,000, 50,000 is the old one. What you will do? So, 50,000 into 15% into 15. 1,20,000 into 15%. Do separate calculation. For after Gandhi Jayanti separate, before Gandhi Jayanti separate. So, how much you will get? 18,000 and 3,750. These are your depreciation total. 21,750. Hope you are clear. Yes. So we have to go for additional depreciation in case of new machinery. In the question they have not mentioned anything. That's why we have not taken. But you have to consider additional depreciation of 20%. Clear? But here we have not considered. Why? Because nothing is mentioned in the question. So we have done normally. Now, so you got 2 depreciation. Your answer is 21,750. Why did we minus this 50,000 means? I'll show you. This 50,000 is purchased after Gandhi Jayanti. That's why we bifurcated. If it is before Gandhi Jayanti, simple calculation. Directly we can take 1,70,000 into 15%. But in that we have after Gandhi Jayanti worth rupees 50. That's why we split it and calculated twice depreciation. Now, so your answer is 21,750. Now, again I'll go back. Furniture is pending. Opening is how much? 15,000. Addition of furniture is how much? 5. 15 plus 5? 20. Calculate depreciation. 15 plus 5, 20. On 20, you calculate depreciation of 50%, 10%. Why it is 50% of 10%? Why? Because February 2000, not 19, it must be 20. So it will be what? Purchased after Gandhi Jayanti. Till March, it is after Gandhi Jayanti only. So we should consider what? 15 plus 5, it is 20,000. And this will be 20,000 on that separate calculation. 15,000, 10%, 5,000 into 50 by 10%. Whatever the newly purchased, we go for half depreciation. Why? Because after Gandhi Jayanti it is purchased. Do all the calculation. You will get this much. Your total is 1,750. Now what are your depreciations? First one, 12,000, 5,000, 1,750. So in this, how much you will get? 18 plus 3, 21,750. If you add everything, so additional depreciation, see, as I told you, on this you are supposed to calculate additional depreciation, I told you. So we have considered here also 60,000 into 20%, additional of 12,000, add everything, it is 12,000, add all the depreciation. Now, 12,000 plus 5,000 plus 1,750 plus 21 plus 12, all put together, your total calculation is 52,500. Please work out this problem twice. This is the most complicated one if you compare to easiest one. In your question paper, you will get easy problem only. But intentionally, I have done difficult one. Why? Because if you are ready to do this problem means you can do any number of problems. So in this session, I have taken all the complicated problem so that you must be ready for everything. Clear? Concept will be same, but the topic will be little complicated. But it is not complicated, like it takes much time actually. Clear? Yes. We're done with that, and next topic will be what? We're done with your depreciation, and next topic we are doing with capital gain. So which topic we are doing now? Capital gain. Before I go to your topic called capital gain, just understand how to go with capital gain. Like, there are two types of capital gains are there. One will be called as long-term capital gain, and one more we call it as short-term capital gain. What do you mean by long-term capital gain? Very simple. Anything which is more than 12 months, more than 24 months, more than 36 months, we call it as long term. What is short term? Less than 12, less than 24, less than 36 months. If you keep that asset, we call it as short term. So why this is 12, 24, 36? Which is a pakka, which is a perfect one? Remember, if it is movable, if it is immovable, if it is shares and security, movable, immovable, shares and security. In case of shares and security, up to 12 months short term, above 12 months long term. If it is an immovable, 24. If it is a movable, it is 36 months. Now this is what? 24. Share and security up to 12 short term, above 12 long term. Immovable property up to 24 months short term, above 24 months long term. Your movable property up to 36 months short term, above 36 months long term. Hope you are clear. Yes, this is all about the days or years to find out whether it is a short term or whether it is a long term. Now, so these are your format actually. In this, what happened? Your full value of consideration, whatever consideration is there, your selling price you are supposed to take. Once you're done with your selling price, less. These are the things you are supposed to less. Like at the time of, if you want to sell your house, what you will do? You will appoint an agent. You will tell them, I'll give you 0.5% commission if you sell this house. So I'll give you 0.5%, I'll give you 1%, it will be like that. So you will give commission. Then what is the cost of acquisition? What is the cost of improvement? What is the gross short-term capital gain? Now, your selling price, assume that you sold your house for 50 lakh. How much commission you paid? 5 lakh. 50 lakh minus 5 lakh, you will get one more adjustment. It will be how much? 45 lakh. Out of 45 lakh, at what price you purchased that house? Assume that 30 lakh minus 30 lakh. And what is your improvement? Like you constructed compound, you constructed some extra fittings and all. It cost you around 10 lakh. So what is your income? 30 minus 10, it will be 20. What is your capital gain? Your gross short-term capital gain is 20 lakh. Hope you are clear how to find out. Yes, these are only calculation you are supposed to do while calculating your short-term capital gain. Hope you are clear. Yes. So once you're done with all the capital gain calculation, remember you are supposed to do exemption if any available under section 54B, 54D, 54G and 54GA. Net short-term capital gain on sale of property. This is all about full value of consideration. Hope you are clear. Like this, you are supposed to find out your short-term capital gain. How to go with long-term capital gain? Simple. Same procedure. Instead of cost of acquisition, index cost of acquisition. What is that? Index cost of acquisition. Instead of cost of improvement, you should go with index cost of improvement. These are the calculation or method or procedure you are supposed to follow. Computation of long-term capital gains at the time of sale of long-term capital assets shall be computed in the following manner. So, your long-term is what? As I told you, same thing, but only one thing will add, that is index and index. These two will come. That is the index value of acquisition, index value of improvement. Directly I'll go to the problem number 1. Remember, while doing capital gain, if you find that anything which are using for personal effect, like your personal two-wheeler you're selling, your personal four-wheeler you're selling, then capital gain will not come. Any personal effect asset if you are selling, the capital gain will not come. Jewelry, there is a capital gain. Only I'm talking about vehicles. Vehicles, if you are using for your personal use and you are selling, no capital gain. But jewelry, house, building, everywhere capital gain will come. Clear? And one more is agricultural land in the rural area, it will not attract capital gain. Again, I'll repeat, agricultural land in the rural area will not attract capital gain. The same agricultural land in the urban area will attract capital gain. Remember this concept, very important. Then, so we go with the first one, agricultural land in Mysuru, urban city. Urban city, whether it comes under capital gain? Yes. If it is a rural city, no capital gain. Remember. Machinery purchased? Yes. Furniture purchased? Yes. Machinery purchased? Yes. Shop purchased? Yes. One resident house purchased? Yes. These are the informations are there. And 1, 2, 3, 4, 5. Almost 6 points are there. This is only adjustment. Your sixth point is adjustment. I'll tell you how to find out it is adjustment. Wait. Now, agricultural land in Mysuru urban city purchased in 2001 for 20,000. Fair market value is around 100, being 30,000. So, at what price it is sold? 5,60,000 it is sold. So anything which is purchased on or before, remember this, remember, concentrate. Any asset purchased on or before 2001, we have to do it what? Actual value, fair market value, whichever is higher. Actual value or fair market value, whichever is higher, should be considered as your price. Now, they have given two price. Purchase price is 20, fair market value is 30. Which one you should consider? Whichever is higher, in the sense 30,000 will be your answer. Hope you are clear. Very good. Now, I'll consider 30,000 as my answer. In this, what happens? 5,60,000 minus 30,000. Can you take 30,000 directly? No. It is a long term, because 2001 asset I am selling in 2021. I have used for more than 20 years. Long term means you cannot take 30,000 directly. You should go with index cost. Again, I'll repeat. You have to go with index cost. How to find out index cost? I'll tell you. We'll go one by one. Now I'll go for agriculture land. Yes. Sale consideration 5,60,000. Is there any transaction charges? No. It will be 5,60,000 only. Calculate indexation like 20 or 30, whichever is higher. 30,000 is higher. Into 289 is always common. While doing your problem, always remember you should go with 289. 289 is a fixed index number for your examination. Okay, divided by 100. It is given in the question only. See, cost of index is 100. 289 multiply always, divided by which year it is purchased. 2001 or before it is purchased, it is always 100 only. Now, 30,000 into 289 divided by 100, your answer will be what? 86,700. This minus this, 4,73,000. Is there any exemptions? No. So your answer is 4,73,300. Hope you are clear. Yes. So we are done with one asset. We'll go for the second one. Agriculture is done. We'll go for machinery. Machinery purchased for 25,000 but sold for what value? 30,000. When it was purchased? 19. You are selling when? Now only, in the 2020 you are selling. Long term or short term? Just 1 year. Short term. 30 minus 25, your answer is 5,000. Easy. See, 30, there is no expenses. 30 minus 25, your answer is 5,000. Hope you are clear. Yes, good. Now, I'll go back to your third one. Furniture purchased on 1/5 for rupees 2,500. See, it is also same thing. Easy. 2019, again it is a short term. 3,800 minus 2,500, 1,300 will be your answer. Now, 3,800 minus 1,300, sorry, 2,800, I'll go back. Your purchase price, 2,500. Yes. So your next one is machinery they have taken. Later they have come back for furniture. I'll go to machinery first. Yes. 3,800. The answer is 38. And 2,500 will be your purchase price. You get 1,300 as your capital gain. Hope you are clear. You can shuffle. You can go with first one, then third one, second one. But the heading must be clear there, whether it is a furniture, whether it is a machinery. And I'll come back to your machinery. Furniture is over. Machinery, this is over. And one more machinery. WDV machinery means indexation will not come, even though it is a long term. Normally, indexation will come for what? Long term. Wherever the long term is there, indexation will come. In this, we don't have indexation. Why? Because it is a WDV, depreciable asset. For all depreciable asset, even though it is a long-term asset, you will not go for indexation. Now, so what happens here? 60,000 is the selling price. Cost is 50 and the WDV is 35. Always go with WDV, not cost. Always go with WDV. Now, it is not fair market value. That is different. This is different. 60,000 minus 35,000. Your answer is 25,000. Your machinery 60,000 minus 35. Your answer is 25. Your final answer is called as 25,000. Next. So again I'll go back. So we're done with everything. Now come to shop purchased 4,50,000 when it was purchased 2006-7. What is the index number? 122. So this will be what? Base. Now, so cost price is how much? 50,000. 50,000 into 289 divided by 122. Hope you are clear. Yes, I'll show you this calculation. 4,50,000 minus 50,000 into 289 divided by 122. If you do the index valuation, 1,18,000. From this, if you minus this, you get answer of 3,31,557. Hope you are clear. Yes. Once you are done with this, again go back. So in this what happened? One residential house purchased in 2008 and 9. 5,80,000 and costing 60,000. What is the index? 137. This index number will come where? Down. So for 2008 and 9, the index number is 137. Multiplied with 289. Very good. Multiplied with 289. In this what happens? Now 5,80,000 minus your 60,000 calculation. 5,80,000. Your 60,000 into 289 divided by 137. If you do all the calculation, you will get 1,26,569. From this, if you minus this, you will get 4,53,000. Again, along with this, see, there is an exemption 2 lakh, restricted taxable long-term capital gain. Hope you are clear. I'll come back. So in the last one they have purchased a residential house of 2 lakh. This is not adjustment. I forgot actually. This is adjustment. The column should be here. They have purchased one more house. See, they sold house and later they purchased one more house. If they purchase after sale, I sold my house, where do I stay? I'll purchase one more house. If I purchase one more house, that purchase cost can be taken as exemption. Now, 5,80,000 minus your purchase cost. Finally, the whatever new purchase is there, you can claim exemption. So minus 2 lakh, you got 2,53,431. Hope you are clear. This is all about your capital gain. So we're done with your capital gain. Next. So we'll go for next topic, that is called computation of total income and tax liability. This is assessment of individual. What is the next topic we are doing now? Assessment of individual we are doing. We're done with which topic? We're done with depreciation. We completed your topic called capital gain, and now we are doing your topic called assessment of individual. Most important, and you can expect 15 marks for this particular topic. Now remember, your depreciation topic will come for 10 or 15. Capital gain topic, it may come for 10 or 15. Assessment of individual may come for 10 or 15. See, instead of you spending your more time like watching 30 videos or 40 videos or 50 videos, that is also required. But if you have less time, please watch this video so that your complete syllabus it will be covered here. Along with that, as I told you, one more session will be there. That is all about your theory topic as well as your question paper discussion. Now, computation of total income and tax liability. Format for computing total taxable income. Now, assessee status, your previous year and assessment year. Whatever your income from salary, house property, profession, capital gain, income from other source, add everything, you will get your total income. I'll show you the exact one problem so that you will get idea. Now, other gross total income, like if there are any deductions are there, any other total income, capital gain calculation, you will not understand anything if you see the format. Directly I'll go to the problem so that you'll understand properly. So these are the tax calculation. 30% will be on casual income and 30% will be on credit investment, unexplained money like black money. And long-term capital gain is 20% and short capital gain is 15%. And add everything, you will get a rebate of under section 87A. It is up to 12,500. So if your total income is less than 5 lakh, you will get rebate of 12,500 for this. Add everything, you will get surcharge. Surcharge will not be asked in your question paper. So rebate, you are supposed to remember up to 5 lakh, what is the rebate? 12,500. Hope you didn't understand anything. The format, nothing to worry, because you will not understand assessment of individual with the help of format. Only if you do problem, then only you will understand what is assessment of individual. Now, so there is a format of your tax liability. I'll come back later. And these are the tax slab. Remember, up to 2,50,000 there is no tax. 2,50,000 to 5 lakh we calculate 5%, and 5 lakh to 10 lakh we calculate 20%, and 10 lakh and above we calculate 30%. Hope you are clear. Yes, this is all your calculation in the tax assessment of tax. Clear? Assessment of individual. Now, so what is the solution for this? So these are the format. Remember, I'll go for this what? Above 60 years, below 80 years, up to 3 lakh. Below 60 years is what? Up to 2 lakh 50. Above 60 years, up to 3 lakh. Above 80 years, your calculation is up to 5 lakh is nil. So don't go for all these things, not required. Directly I'll go to your problem number 1. Concentrate. Don't go in depth, but I'll tell you what is a concept, because you have question, you have solution with you. Please work out, you will understand. Now, determine the net income of Dr. Karan for the assessment year 2020-21 for the following particulars. Now, in this, chargeable business income 6,35,000, long-term capital gain. What I am doing is, what is my income? Just assume that I am paying tax. If I am paying tax, how to calculate my tax? So here there is a solution how to calculate my tax. I get salary from my college. I get income from my tuitions. I'll get rent from my house property. I have given for rent. I'll get income other, like I buy lottery. From there I'll get income. I'm doing stock market trading. From there I get income. All this including what is my total income. How do I pay my tax? All this you will understand in today's session in this particular problem. Now, chargeable business income 6,35,000. Long-term capital gain in respect of commercial building 1,17,000. Long-term capital gain in respect of shares non-listed 1,10,000. Income from horse race 1,04,000. Winning from wherever net is given. Remember, lottery means 100 by 70. Expenditure on recovery of lottery price, yes. Interest on IDBI, yes. Interest paid on capital borrowed, yes. Interest on company's deposit, yes. Payment of rent for residential house, yes. Insurance premium paid on life policy, yes. And Mediclaim policy of insurance, this. So remember, if you are studying everything in the tax management means, I'll give you suggestion. You can take this topic as option. No, I want to study this one also. No problem. It is not difficult, but you are supposed to remember many concepts in this. That is the only thing. Nothing is difficult in your syllabus, but compared to other topic, only small format will be there. But for assessment of individual, you are supposed to remember many things. Now, all the informations are given. We'll go with the solution. Like, we'll go with your total income. What is your total income? Business income, other source. Like that, we'll go one by one. And like this, business income. What is your business income? 6,35,000. See, we have taken 6,35,000. What is the second one? Income from other source. What do you mean by income from other source? Like any interest collected, lottery income, puzzle, crossword, casual income, any other kind of post office saving bank deposited, NSC certificate, or gambling, all this comes under your other source income. Now, I'll go back to your other source. See, you have winning from lottery and lottery prize, interest, interest paid capital borrowed, interest on company deposit, rent on residential house, it is a house property. Insurance premium paid for life policy, these are investment. Only we have to see which are receipts are there. Now, see, interest on IDBA less interest paid, interest on company deposit, and if you take all this, you will get your gross total income of 6,82,700. Along with that, see, is there any deductions here? Yes, 80C. What are the deduction? LIP, life insurance premium paid. Deduction of 80D, your medical insurance paid. 80G, is there any long term? Yes, 1,17,000 and 1,10,000. I'll show you in the question. See, this one is not your income. This is your payment. That's why we don't consider house property. We have to take only receipt. Wherever they have mentioned that payment, those are your deductions. Now, so where is your capital gain here? See, where is your capital gain? Like long-term capital gain, 1,17,000, 1,10,000. Take these both. So your capital gain is 1,17,000, 1,10,000. Your capital gain, you got 2,27,000. Add everything. Your horse race income, take it separately. Add lottery income. Add everything. You got 12,21,470. Very simple. You have to check where is income from salary, where is income from house property, where is income from capital gain, where is income from business or profession, where is income from other source. If you add everything, you will get 12,21,470. After that, what you will do? List of the following. These are the adjusted gross total income. If you can solve this, you can solve, or else you can skip actually. Why we are doing this means, this is all because of 80GG. Wherever you get remuneration, then we go for this calculation. Now, your actual rent is how much? See, they have given rent. Payment of rent for the residential house, 1,36,000. For this purpose, we are doing this calculation. So this is a standard one, 5,000 per month, 60,000, 25% of the adjusted gross total income. This one. So what are the adjusted gross total income? Your 6,82,000 minus 18 minus 16 plus 3,79,000. It will be 25% of adjusted gross total income. Where is 6,82,700? I'll show you. 6,82,700 other gross total income. From this, you minus your 18,000. See, 16,000. See, 3,79,000. 3,79,000 in the sense this plus 3,79,000. Then you will get into 25 by 100. You will get answer of 2,56,000 something, and 10% of adjusted gross total income 1,36,000. In this, whichever is less, consider your final answer is 33,230. Hope you are clear. Yes. So little complicated one for you. That's why I suggest you income from assessment of individual. You can take it as an option. Still, if you want to learn means no problem. You can learn and you can work out. Now, this one is income from other source. Income from other source, it is nothing but anything like other than income from salary, other than income from business or profession, other than income from capital gain, other than income from house property, everything comes under income from other source. Like dividend from preferences, income from undisclosed, income from letting of higher building, interest on bank deposit, income received from ground, director's sitting fees. Then winning from lottery, net is given means what? Into 100 by 70. Gift received, like 80,000 as a gift, yes. Gift you remember always. Any gift collected from your relatives, exempted. Any gift collected on occasion of marriage, exempted. But any gift collected other than your marriage from your friends is completely taxable if it is above 50,000. Again, I'll tell you. Up to 50,000 gift is exempted. Above 50,000 if you collect gift, it is taxable. The same gift if you collect from your relative, exempted. Same gift you collected on occasion of your marriage, exempted. Hope you are clear? Yes. Now, 80,000 gift from friend, taxable because it is above 50,000. Don't minus, fully taxable. Received 1 lakh gift from elder brother, exempt. Received 1 lakh 40 as a gift of marriage, exempt. Received gift from a grandmother, exempt. All are relatives, so it is exempted. But this friend above 50, taxable. Then, following are the deductions available. At the end, you have all this deduction. You are supposed to do what? Income from other source from this. If it is gross, same value. Net 100 by 70. See? Dividend on equity shares. Remember, any dividends are there. Indian dividend, it is not fully exempted. Up to 10 lakh exempted. Above 10 lakh means you are supposed to pay tax. Now, 12 minus 10, 2 lakh. Income from undisclosed source, 7. Income from letting house. So, any charges are there, you are supposed to minus 2,500. I'll show you. See, these are the expenses made for letting of machinery. That's why we have deducted. Whatever given in the question, just copy paste. So, interest on bank deposit, income received, director sitting fees, winning from lottery, it is net. That's why we have done 100 by 70. And gift received, as you know that I explained you, add everything, you will get income from other source being gross total income. Hope you are clear what is income from other source? Yes. Now, next topic I'll go with TDS. What is the next topic? TDS. Which are the topic we completed? Again, I'll repeat. First one we completed depreciation. Yes. Second one we completed capital gain. Yes. Third one we completed assessment of individual. As I told you, assessment of individual, little complicated. If you want, you can work out. If not, you can skip that. I'll tell you another 2-3 easy problems are there under assessment of individual. In the notes, revision notes, I have given those problems. Please work out those. Rest you can skip. And next we discussed income from other source. That is also easiest one. We completed that. Now, in this, from the following details, income computed TDS amount for each transaction, like winning from puzzle. Winning from puzzle, it is nothing but 88,000. Winning from puzzle is how much? 8,000. I have given you already what is the slab for TDS. Remember that. Lump sum payment to contractor. See, this is 1%. If it is mentioned X Limited, 2%. Individual, 1%. Winning from puzzle, less than 10,000. So it is exempted. Dividend from company other than listed company, taxable. Interest on security, taxable. Commission above 15,000, taxable. Sale of building up to 50 lakh, exempted. Below 50 lakh, exempted. Above 50 lakh, taxable. So this is exempted. Withdraw from national saving. I'll come back to that. Rent paid to building of 68 per month. See, up to 50,000 per month is exempted. Above 50,000, taxable. LIC amount paid. See, this is also up to 1 lakh we have limit, but here we have 2 lakh. Withdraw from premature, up to 50,000 we have limit, but here we have 53,000. Now, see answer. Winning from puzzle, 8,000 exempted. Lump sum payment, 40,000, 2%, 800. Contractor, because it is a company. Individual means 1%. Dividend from company other than listed company, 50,000, 10%, 5,000. If it is a other than, either it is a listed company, up to 10 lakh is exempted, unlisted taxable. And interest on security like 15,000, 10%, 1,500. Insurance agent 40,000, 5%, 2,000. Sale of building 49 lakh, below it is 50, so it is exempted below the limit. Next, withdraw from national saving 5,000, 10%, 500. Rent paid on building like it is above 50,000, so 5%, 3,400. LIC amount paid to the policy holder by company on maturity 2 lakh 1%, 2,000. Clear? Yes. Withdraw from premature employment 53, 10%, 5,003. Why it is taxable? Above 50,000. If the amount is above 50,000, what we are supposed to do? We have to consider it as taxable. Hope you are clear? Yes. Next one. So we done with what? We done with your TDS. What is the next problem? This is nothing but computation of taxable income and assessment year. Business income, everything is given. It is given. Yes, this is nothing but your advance tax. This is nothing but what? Advance tax. What we are doing now? The topic called advance tax. In the advance tax, what we are going to work out in this? The estimated taxable business income of Vijay Limited for the financial year 2019-20, 6 lakh, and taxable long-term capital gain is 3 lakh. Calculate the advance tax installment assuming estimated TDS is 25,000. These are the informations are there. Again, I'll repeat. Taxable business income is 6 lakh and all the information. And taxable long-term capital 3. 6 plus 3, how much? 9 lakh. This is into 30% and this is into 20%. Remember, capital gain always 20%. Other than capital gain always 30%. And what is the due date for advance tax? 15th June, 15th September, 15th December and 15th March. These are the due dates we have for advance tax. What are the percentage? Remember, 15%, 30%, 30% and 25%. Now, these are the due date as well as percentage you are supposed to remember. In this, the interest calculation I have not done in this, but I'll do it in the question paper. Model paper solving is there now. In that, I'll do your interest percentage also. Now, see, your business income is 6 lakh and taxable income is 3 lakh. Total it is 9 lakh. What is the tax payable? So, 3 lakh into 20%, 6 lakh into 30%, your calculation. Why? Because long-term capital gain always go with a separate calculation. So, you will get total tax of 2 lakh 40, add 4% education cess, 9,600, total 2 lakh 49,600. Is there any TDS? Yes. 25,000 TDS, your final answer, 2 lakh 24,600. Once you're done with your calculation, then you go for 4 installment. 15th June, 15th September, 15th December and 15th March. Now, advance tax payable like up to 33, up to 2,24,600 into 15% into 30% into 30% into 25%. Hope you are clear. Good. Calculate, you will get, these are the advance tax. Total of all these four should be equal to your 2,24,600. Hope you are clear or not? Yes, you are clear. Now, this is all about your advance tax. We discussed your TDS, we discussed your advance tax, and one more topic is what? TCS, tax collected at source. All the theory topics I'll come back in the one more session. Now, assessment of company, the next topic. I don't spend much time on assessment of company because you already know that. I have explained you many times, but I'll tell you the concept. Now, These are the format of assessment of company. Remember, easiest one. Net profit, whatever given in the question, copy, paste, add disallowed item, donation, penalty, income tax, wealth tax, proposed dividend reserve, depreciation, if it is given in the adjustment, don't take adjustment value. Whatever given in the table, that only you should consider. When you will consider if depreciation given in the table also, depreciation is given in the adjustment also. Both the side, if it is given, then you should consider depreciation. Depreciation is given only in the table, not given in the adjustment. Don't touch. Don't take depreciation. If depreciation is given in the both the sides, in the table as well as adjustment, then whatever given in the table, add. Whatever given in the adjustment, minus. Table means what? P&L account. Clear? Yes. Municipal tax take, preliminary take. Preliminary, remember, up to 80%. Intangible asset, yes. Outstanding expense also, yes. Intangible asset, normally I would take 75%. Remember, this is 75%. Then, these are the less: interest on security, dividend, capital gain, rent, bad debts recovered, previously disallowed, profit on sale of asset, premium on shares, casual income, bad debts if there is an adjustment, and depreciation. All these are your effect. Hope you are clear. Good. Now I'll go to the problem number 1. From the following information submitted, find out the total income of Well-Wisher Company. What is this? Well-Wisher Company. In this, opening stock, gain purchase, salary, general expense, interest on loan, wealth tax, yes. Provision, yes. Office, no. This much only. Start with your net profit. Sale of sugar, no. Rent of agriculture, yes. LTCG, yes. Bank interest, yes. These are minus and these are plus. Now, what are the adjustment? Office expense includes 1000 donation and 2000 donation. So, under office expenses, 2 plus 1, you are supposed to take 3000. Now, net profit as per P&L, 4 lakh. Add disallowed item. This. Whatever I have mentioned there, I have added 88. 4 lakh 88. What are the allowed? These are allowed 5 lakh 57. This one is lesser than this. So you will get profit or loss. Your answer is in loss. Now, whatever you get, finally I have to do all the total income. Income from salary, always nil. Income from house property, in this problem, nil. All this information, where do you get? Credit side of your question. I'll show you. Everything you will get this side. Is there any house property? No. Long-term capital gain? Yes, 5 lakh. Other source? Yes, 7,000. All the interest comes under other source. Now, see, business income is what? Whatever you have calculated, the whole table is there, no? That answer is called as business income. 69,000 we call it as your business income. So 69,000 minus value, long term is 5 lakh and bank interest 7,000. Agriculture income is exempted. Add everything, you will get 4 lakh 38. There are 2 donations are there. 2 plus 1, 3. 4 lakh 38 minus 3, you got 4 lakh 35,000. Hope you are clear. Yes, this is all about your assessment of company. Again, I'll repeat. This is all about what? Assessment of company. We are done with assessment of company. Next one is what? Aggregate turnover. Your GST. So, I don't go in detail. I'll tell you the idea actually. Whatever given in the question, you take everything. If it is a calculation of aggregate turnover, whatever given in the question, you take everything except GST and tax. GST and tax you are not supposed to take. And the second one is what? Your job work. And third one is what? Anything which is received. Because we are not doing received. We are doing only sales. We are not receiving. We are giving. So, 3 things. Aggregate turnover means what? You have to take everything except 3. One will be your GST or tax, and the second one will be your anything job work. Job work means what? I have done all the production work, but packing I don't know to do. What I'll do, I'll give it to somebody. That person will do all the packing work. So the packing work will be done by XYZ. Somebody will do that. So that is called job work. Anything which is given for job work, we consider it as not considered for aggregate turnover. Which are the three things we don't consider? Packing one, or anything like packing we will not consider, and job work we will not consider, and one more is what? Very good. And anything which is received or receivable will not consider. Now, in this, sold goods to Mr. Anil, take. Sold goods to Mr. Anil of Manu Mumbai, take. Sold goods to Anil Janit Company, take. Sold the goods received, don't take. Goods supply, we are not receiving, we are giving. Sale means what? We are giving. Goods supplied by Anil to job worker, we will not take. Supply of services, take. Sale of goods to merchant, take. Transfer of goods from branch, take. The amount of CGST, SGST by Anil, 50. CGST, SGST, we will not take. Hope you are clear. Yes, see, we have taken everything. Job work we have not taken, and anything which is received we have not taken, and GST whatever paid we have not taken. Add everything, you will get your aggregate turnover. Other than these three, remember I am telling once again, other than whatever three I told you, if question asks for calculate aggregate turnover, other than these three you should take everything. You should take everything. Hope you are clear. Good. The next one is not aggregate turnover. This one, GST payable. Under GST payable, again I'll tell you the logic actually. What is the logic means? Don't learn 2 to 3 pages of concept. Always remember the logic. In that concept is included. If it is SEZ, if it is export, if it is free trade zone, if it is agricultural product, SEZ, export, free trade zone, agricultural product, if it is any purchases, if it is anything like job work, anything like GST and all, these things will not come under this. Okay, so remember, any R, one more is free trade zone. These are the things are considered as exempted. Export to Japan, export to Malaysia, export to Hong Kong, everything comes under exemption. Hope you are clear. Yes. Now, in this what happens? Commodity X sold to a dealer. In this, remember, there are three types of tax are there. Which are those? Like CGST, SGST, IGST. CGST, SGST and IGST. Now, under CGST, SGST what happens? Any sales happen within Karnataka, Mysuru to Hubli, Mysuru to Mangalore, Mysuru to Bangalore. Within Karnataka, if you do any sales, within Karnataka, if you do any sales, we call it as CGST, SGST. If any sales happen Mysuru to Goa, Mysuru to Madhya Pradesh, Mysuru to Tamil Nadu, one state to another state, then we go for IGST. Hope you are clear. If they give 18% means 9%, 9%, half, half. 18% means divide, 9%, 9%. So similarly, IGST you take it directly, whatever within state happens, you have to divide, you have to split. Some half portion will go to state, half portion will go to central. Now you only tell me, commodity X sold to a dealer, Delhi. Delhi means what? IGST. Commodity A sold, nil rate, don't calculate. See, I have given you the list. Nil rate I have not mentioned. Free trade zone, it is nothing but one more, nil rate. Nil rate also not part of your turnover. Next, product B sold to a dealer in Chennai. IGST. IGST means what? One state to another state. Then product Y exported. Any exported will not come. Commodity X sold to a dealer in Jammu Kashmir, one state to another state. IGST. Product Z sold to an unregistered dealer in Mangalore. Mangalore is where? Within Karnataka. So it will be CGST and SGST. Product M sold to this special economic zone will not come because I have given you list. Then product A sold to a dealer in Chandigarh, 12%. Chandigarh within Karnataka or outside Karnataka? Outside Karnataka. So it will be what? It will not come, sorry, it will come, it will be what? IGST. Product X which is exempted. Exempted will not come. So that also I'll give you exempted. Exempted also will not come. Then product Y exported to Japan. This is over. Next one. Product A sold to a dealer in Hubli who is registered under composition scheme. Hubli is where? Hubli is in within Karnataka. Within Karnataka means what happens? CGST and SGST. Product A sold to a free trade zone, FTZ, Visakhapatnam. Free trade zone means what? Yes, it is not taxable. Product K is sold to a registered dealer of Mangalore. Mangalore means what? CGST, SGST. So whatever percentage they have given, 18%. How to do this? I'll show you. 3 lakh into 18%, you will get 54,000. 3 lakh into 18%, you will get 54,000. Now, if it is 54,000, what you are supposed to do? Simple one. Divide. So, 27,000, 27,000. This is only your calculation. Hope you are done with your calculation. Good. This is all about your calculation. You are done with this. Same thing I have done. Your actual value with percentage. If it within state for both. Out of state, this one. I have done this. You can check it later. Yes. So you understood the concept. Please work out. You have answers with you. So theory will be what? This will be like next session. So why I have mentioned next session means, what is next session? Next session is all about the theory. In today's session, I worked out all the practical things. All the practical things I have covered. In the next session, I'll work out one model question paper or else your previous year question paper. Along with the theory importance, I'll give you in the next session. Now, I'll go back to all the previous slides so that you can take screenshot. Yes. So this is all about your agenda. So depreciation, capital gain, income from other source, assessment of company, assessment of individual, TDS, TCS, assessment procedure and GST. These are problems on depreciation, 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 depreciation. These are your short-term capital gain format. Computation of long-term capital gain. Computation of long-term capital gain. Problems. Solution. Solutions. 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 Solution. Solution. Yes, this is your assessment of individual. AOI stands for assessment of individual. Your format, as I told you, assessment of individual will be optional for you. If you want, work out, or else you can skip. format, and these are the tax slab for individual below 60, above 60, below 80 and above 80. This is problem number 1. Solution for that. Continuation of solution. Again continuation. There is a problem for income from other source. Your problem, and there is a solution part. There is a solution part. There is a problem on TDS. There is a solution. There is a solution. There is a problem on advance tax. There is a solution part. Solution part. There is a problem on assessment of company. Format. Question. Adjustment. Solution. Solution. And there is a problem on GST. Aggregate turnover. Problem. Problem. So there is a solution part of aggregate turnover, and there is a problem on GST payable. Question. There is a solution for your GST payable. There is a continuation of your solution. So your theory will be taken on next session. Yes, this is all about your today's session. Hope that a lengthy session, but it is really helpful as well as useful for your examination. So you are spending 3 hours for your examination. Please spend 1 hour before your examination. Please watch this. Share as much as possible with your friends, because let them also get benefited. Good things always has to be shared. Thank you.